Hey everybody, welcome back to the channel. Today we're talking about NIO stock and why I believe it will grow past its $150 price target despite its poor performance for the last few days. This video is full of great information, so it's in your best interest to stick around to the end so that you can make smarter choices and be more successful with your investments. But before we begin the video, I just want to say a really quick thank you to those who have been liking and commenting on the videos and subscribing to the channel. It's awesome to see that the community is so friendly and supportive, and it makes putting these videos together even more fun. I love having conversations with everyone down there in the comments section, and I respond to every one of your comments. So if you want to talk about stocks or what you ate for brekkie today, I'm all ears. If you're new to the channel, hi, nice to meet you. I created this channel as a way to share my thoughts and opinions on stocks, cover updates and news, and sift through all the useless information and fake news out there to give you guys the important stuff. Because when I first started investing, that's the type of channel I wanted to see. So if you like the sound of what I just said, stick around. Lastly, nothing I say should be considered professional advice. These videos are for entertainment purposes only. I do invest in these stocks, and I do tell you my honest thoughts and opinions, but it's ultimately your choice if you want to listen to a stranger on the internet. Let's dive right into the video, beginning with a whopping Q3 earnings report. NIO's Q3 earnings report was exciting to say the least. The results far exceeded everyone's expectations. I know I've been bullish on NIO, and I did not expect to see the level of growth they presented. They've had a triple-digit delivery growth, triple-digit revenue growth, robust margin expansion, a significant decrease in net loss, and earnings per share last quarter were negative $1.70. This quarter, it's up to negative 56 cents. So we're on the right pathway to seeing our first profitable quarter from NIO, which is really exciting. And it sounds good, but why did the stock drop afterward? To be honest, there's a lot of factors at play with NIO stock dropping. I think the main reason is that it climbed a bit too high too soon, and it scared a lot of investors that its quote-unquote bubble may burst. Just a few months ago, I said it would hit $50 by the end of the year, yet here we are, not even in December, and it's been sitting right below that $50 mark for days. I really don't think it's in a bubble at all. It looks like it's just going to consolidate around this level, and the mid $40 mark will be its new support line. The important factor here is that the Q3 earnings report showed that NIO has the underlying fundamentals it needs to grow its way up to $150. With nothing but good news to hear from the company, I'll be continuing to buy in and hold for the foreseeable future. I'm really excited about the future for NIO, and you should be too. Let me tell you why. Let me break down the Q3 earnings report a little bit better for you. Deliveries rose 154% year over year, resulting in record high levels. Average sales price in those vehicles rose by 2%, not a lot. Total revenues rose nearly 160% year over year, also to another record high. The gross margins have done a full 180, from being a negative 12% Q3 last year to a positive 12% this quarter, which is a pretty substantial swing. So this essentially shows that NIO's growth will allow it to follow in Tesla's footsteps and reach sustained profitability. The guide implied that all of these favourable trends we've just seen will carry on and continue throughout Q4. It calls for another quarter of triple-digit delivery growth, triple-digit revenue growth, and meaningful profit margin expansion. All in all, it was a great quarter for NIO and all of NIO's shareholders. Hopefully that's some of you watching. I know I'm pretty happy, and it's been a few good months for me. This great quarter pretty much confirms that NIO is going to be seen as the Tesla of China. It's been speculated now, but I think we can safely say it. The results are finally speaking for themselves. Long story short, NIO makes the best electric vehicles in China, with market-leading driving range and performance specs. NIO sells those cars under a great brand, which has become somewhat synonymous with cool and luxurious in China. And NIO's price tag on those cars is surprisingly affordable, in the $50,000 to $80,000 range. Because of the company's battery swapping business model, which removes the cost of battery ownership for consumers. Basically what I'm saying is NIO is doing in China what Tesla has already done in the US. That's a pretty attractive proposition, because by extension of having over 1 billion people, China is home to the world's largest auto market. Many people seem to forget that in all the electric vehicle sales last year, over 50% of them were in China. The market is so much bigger than the US market, and I think a lot of investors seem surprised that it has a larger valuation than General Motors. NIO is on track to dominate the EV segment of that enormous market at scale, and not just China, but possibly by expanding internationally as well. These are just huge catalysts in itself. To date, everyone is focused on NIO's potential to dominate the enormous Chinese market. The company will do that, but the company will also find great success in expanding its retail footprint in North America and throughout Europe. That is, when it comes to making EVs, Tesla is 1A, NIO is 1B, and everyone else is so far behind that it's actually mind-boggling. NIO and Tesla cars regularly get 300 miles plus of driving range. They recharge quickly, they go from 0 to 60 miles an hour in just a few seconds. They feature a 100 kilowatt hour battery pack and have 150 plus miles per hour top speed. Those specs just aren't seen much across the EV space. I know there are other competitors who have made very good EV cars like Porsche with the Taycan, but that's not unaffordable for anyone outside the top 1% because it costs as much as a new Lamborghini. So if NIO decides to start selling EVs in the US and throughout Europe, the company will find great success in doing so. The bottom line for NIO stock is that NIO is a long-term winner. Any near-term weakness in this emerging hyper-growth EV market is just another buying opportunity. Look, that'll do it for today's video. I know it was a short one and I haven't covered NIO in a while, but with its earnings report still being fresh, I thought I'd like to share it with you all, so thank you very much for sticking around this long. If you watched the whole video, you're an absolute legend and I appreciate you. And if you haven't yet done so, hit that subscribe button so you don't miss future stock news. Thank you and see you later.